So we don't expect price beyond here. So that is what we are trying to tell ourselves now. We don't expect price beyond 72,200. So if you put it at 7,800 is still okay, but that is when you are going to close here to expect reaction at that level. So that is how to engage this trade. So we are at a crucial level where we expect a fall. And of course, you don't want to panically also close at this level, because where you are now, you don't want to close because price may fall from this current level. And for us to be sure if price is going to fall or not, so what are we going to do? Let's now switch to the lower time frame. This is now the weekly chart now. Sorry, the daily chart now. So this is the daily chart now. So like I told us, this is our A wave. You see, when you now switch back to this kind of time frame, you will understand better, because if you are trying to analyze this particular trade on this time frame, you get confused. You won't even understand what it's doing, because you won't see what is happening. So you won't see it very well. So you can see the importance of trying to look at the higher time frame to start your analysis from there, to now see what the price is doing. So this is A. We need to see a reaction here. If price should break above here, then I want to see price around these two levels here. This is 61.8, where we don't expect price. So anybody may put a stop loss at 76,200 because you don't want to lose. You might not be watching. So 76,200 is a place to put your stop loss, which is behind 61.8 fib retracement in the first place. So now, but if you now see the price action that is like it's going to close around here, there's nothing to wait for. Once you have like 1 hour candle price action or 4 hour candle price action, close immediately and wait for price to walk up to this area, and that is huge, really. That is huge. Between here and here, let's say that's about that's 133 pips. That's huge. 133 to 150 pips. That is huge. So minus 15, minus 13, you know, that is huge. So once we see a price action that is not in conformity, we close here. Now, looking at the internal structure of this particular wave here, it's also a corrective wave pattern. So we said this goes up here and this one came back down. So you can even, if you want to engage this one as A and B and C, it won't be that correct, because the whole of this is treated as with A, with B. So to engage this one as A and B and C, I don't know about that. But this is the last wave here. So that's what I can tell you. This is the last wave here. You know, this is a correction. And so this is the last wave here. So we want to catch the fall. This is on daily candle. So in case you close your trade, you want to catch the fall. This is like it might be an ending diagonal. So, and you want to catch this fall. You just need these two to catch the fall. You need these two here to catch that fall as early as possible. Good. So we can fine tune on the lower time frame, because the price is almost where it's going to fall. So we can fine tune on the lower time frame. But in case they want to play a fast one on us, once it closes above it, the nature of the candle above this black line tells you to close your trade. So that's a good money management. You close, then you wait to sell from higher price. So these are what to do. So if you have this on a 4-hour time frame, so you can see that it's burning out already. So we are seeing corrections for a little more upside. That is what, so we still have one, it looks like we have one more wave to the upside. That is what I can see on this. It looks like we have, the price is not ready to come. If price is going to come down from here, it should have fallen. It's a sharp move. So when you see a sharp move, then you know price wants to come down. Then from that level, when we see an important level that we have mapped out from analysis, that price is likely going to come down. So we need to see reaction for at those levels. So if you're not seeing the kind of reaction that we expect at those levels, there's no point just waiting. Close your trade. More so if it touches the level and we're not getting a satisfactory price action, we have to close our trade and watch for what is going to happen higher to, you know. So at this level now, we are going to see a more higher move. We can just see price move above, break this top a bit, give us a desirable price action. Of course, it might not really stall there, but a bit above it, and then it will come down. But if the price action is such that they're going to move further up by that 100 pips, you will see between now and Tuesday. Between now and Tuesday, we will see. So, and when you do this, then you go to the lower time frame in case you want to catch the fall. The lower time frame will always mess you up. You will see this as a sharp reaction and this as a correction. So it doesn't really, you know, work like that. So it's just to set your alert. You click on this, you set your alert 15 minutes. Once you have 1 hour candle close below here, like 4 or 3 15 minutes candle close below here, and that is when you want to say, okay, you want to sell in case of anything. With that, we have come to the end of the training. The best way to approach this is to always start your analysis on the higher time frame. And anytime you are doing your trade, even if you expect, the only way you can confirm, you know, at those levels, when you see this, this is a recipe for a down move, which is what we call, if anybody is scalping or you are doing a day trading, this is the recipe for a short down move, which means you understood from the higher time frame that this thing is going to happen and you want to just shop quickly and get out. This is not a price action for downside. This one, this candle, this is a daily candle. If you look at the 4-hour time frame, it will fool you. I will show you now so that you will see. This is how to spot what we want to spot. On the 4-hour time frame, this is what is giving you. You think they have reversed the trend on the 4-hour time frame, and after this one went a bit lower down. So you think is a trend change on the 4-hour time frame. But if you quickly switch to the daily candle, watch the candle on the day time frame, then you see it's like an inverted hammer. An inverted hammer, when it comes like this, is just a recipe for a pullback. It's a recipe for a pullback. That's how to see it. You know, if it's like the other way around and this thing is up and the wick is down, then you now know that they are changing the trend. That's the thing. So when this one also formed again, it's a recipe for more upside. This one. But because it's not on any important fib, stick to your fib analysis, stick to your analysis. You are only watching for when these things are going to form on those important levels. So this is an important levels. We are expecting the price to give us a reaction now. This level, 60. So that's how to spot important levels. 75, 500, 75, 550 level. This is an important level we need to spot a reaction. So if you don't get that reaction, so we are going to get this reaction in a few minutes or few hours time. So if we don't see that reaction there, then we are going to wait until we come up to these levels. Of course, on the daily candle is giving us an ending diagonal, but they can change it, pretend like this, and give you a breakout it's possible. So that is why you can't say that the person that is giving you a signal does not know what he's doing. You can't predict that they're going to do that. They might go further. So whatever fib level that they want to, change structure or change their the directions, they will. But you will just know that they can either do it here or move up here. They fail to do it around here. They move to this now. This is 100. If they didn't do it here, then it should be around this area. For maximum, they cannot go beyond here because we are still on a downtrend. That is what is obvious. Now, if you look at the DXY once again before I finish and I close for today, the DXY, our analysis on the DXY. Our analysis on the DXY that I did, let's look at it again before we close for today. Now, the analysis on the DXY is this once again. After this correction, this is A, this is the first move. This is A, B, and C. We have 1 and 2, 3, and 4, and 5. We had this move. And it's a 5-wave move to the downside. We now have a correction A and B. We're going to correct C. So there is still tendency for more upside for C leg. That is what we are telling ourselves. And A, the movement from here to here, this is like 0.9, which is 90% fib retracement, which now tells us that we can have 61.8, 100, 123 movement here to still go a bit further. So that is what is obvious from the higher time frame here on the DXY. So DXY still have a bit more movement to the upside, but at the same time, you don't want to sell from here. You want to take advantage of, still buying when it corrects down to buy up. You don't want to also buy from this level. It doesn't make any sense to buy from this level if you're doing DXY or any of other structures. You have to look at the structure before you say you want to buy. But buying is still the option here. Now, looking at the correction A, B, and C, this is at the level of 61.8 fib, which the price had broken or pierced at the moment, which now looks as if the reactions we are going, the best reaction we are going to have here is to correct with 5 to 4, which is with 4 will be corrected within this area here and here, and before we see more upside to finish with 5. So we still have to do with 4 corrections, then to proceed to with 5. So because we are doing with 4 corrections, we might be seeing up and down movement on the DXY while we are correcting until the last sharp movement. Then when everybody's expect that, oh, maybe they're going to move, they're going to do a truncation the way they fooled us on UNPS, and they will just finish with 5 and they will trust down. So that is what is expected. The DXY still has a bit more of strength, and that is what I can see. That is what I can see. So now on the much lower time frame, so we can see, for me, I see this as wave 1 and this as wave 2, and whatever we are seeing in the middle as the internal structure of wave 3, that is what I can say. And 3-1 and 3-2 and a 3-3 and a 3-4 at this level, and a 3-5 is about being complete if it's not yet completed by these. So the 3-5 may be completed here. We might be seeing a fourth reactions to complete that, and so we'll see how it's going to go. So how are we going to understand what is going to happen here? So let's switch to daily time frame. So after this move, of course, this is also a recipe for down move, and so which is a correction after this move, which is the end of supposedly 3-5, the end of supposedly 3-5 here with this correction. So we are now seeing this is the first move down, which is A, and this is B, and this is C. And after this, we're going to see X going up. I still believe that this might crop up a bit to break the top, but the price will still be coming down. So we are still going to have some move, up and down move for a long time around this zone. and it will now break sharply down as if they are changing direction. Again, they will break the top again to, that is what to expect. They will break the top again as if they're going to finish with 5. So let's call it a day. I will try and upload all that we've done so far for people who cannot watch us today online, for maybe signals and all of that. And so I'll continue. So good night and God bless you all.